Hi, welcome to this video day. It's the 25th of May. It's Saturday. We're just going to be looking at some trade setups today and looking at some simple techniques to catch market reversals or market turning points and get really good risk to reward on your trades by going against the majority at the right time. Now, the pairs we're going to look at today are going to be all including the GBP, GBPUSD, Euro GBP, GBPCAD. We'll take a look at the charts in a moment. Now, did a video last week and saying looking for a turning point in the British pound. I think the British pound is going to have a good rally to the upside. The market sentiment is very bearish. Now, in terms of techniques we're going to use, a very simple technical analysis, just support and resistance, one indicator, which is Bollinger Bands, and we're going to use a way of judging sentiment, which comes from legendary trader and investor George Soros. And the technique is very easy to learn. The logic is soundly based and it can be very effective. Now, what we are going to do is go and take a look at the techniques and the pairs. But just before we do so, though, just keep in mind when I'm giving my analysis, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 major forex pairs, you can click on the link beneath this video, get live access to our members, and you can also join our free Facebook groups and also join our free mailing list. Right, in terms of trade setups, we're going to do GBP USD first. We're on the chart of GBP USD daily. I'll draw my technical levels in a moment, but I just want to go through a technique from George Soros, which I think is just so good, okay, and why it works, and the big fundamentals and sentiment behind the chart. Now, in terms of up the top, I've started with a quote. If you can hold your head when everyone is losing theirs, you probably haven't heard the news. It's an anonymous quote, but it's very relevant to what we're talking about here in terms of, in my view, people are losing their heads when they're looking at the news in relation to the British pound and seeing it falling far lower when a turn is likely. We've got a blue candle on Friday, but I think we could really gain traction to the upside, which I'll come back to in a moment. Now, GBP is coming off a bearish extreme in my view. Keep this quote in mind. The worse a situation looks, the less it takes to turn it around. That's from obviously George Soros. I'd like his sort of views on what is discounted by the market and what are traders anticipating with no supporting evidence. Once traders start to do that, then a turning point is close. So let's look at anticipation. Just go to these bottom notes. May to leave, okay, UK PM to leave as Prime Minister. That was discounted all week, and she's gone, obviously. Hardliner to be PM, well, everything points to that as well. So that's the basic facts, I think, that are true. Odds of a hard Brexit are high. Now, you can see this either way. I personally don't think so because the will of Parliament is to do a deal, okay? But, it's debatable, let's say. I'm seeing it one way, others might see it another way. But point number 3 is clear anticipation from traders with no supporting evidence. Let me just read you a quick quote. The uncertainty about Brexit makes a rate reduction as the possibility of a disorderly Brexit becomes more likely. If we see a hard exit, rate cut bets will grow rapidly. They've all actually already grown rapidly. A lot of people talking about rate cuts, traders and investors. That's just anticipating something that is not going to happen or extremely unlikely. And when you get a bullish or bearish extreme, you've got the facts, and then suddenly traders start to anticipate either very bearish scenarios or more bearish scenarios in this case, or more bullish scenarios if prices were going up. The Bank of England will not cut rates. They're more likely to raise rates than cut. Why would they cut rates if the pound is going down? They just send the pound into free fall, spike up inflation. If you look at central banks, the way they behave, when a currency is under pressure, they're more likely to raise to support it than to cut it or cut rates. No substantiation, in fact, whatsoever. It's just the fear around the British pound, or just making the story too bearish and just anticipating things that are unlikely to happen. And yeah, that Bank of England rate cut, that's just so ridiculous. There are sensible people who are saying, that isn't true, but the majority like the idea of a rate cut. So for us, basically, what more bad news is going to hit the pound? I can't see any, to be honest with you. Of course, something new could come in, but the way I see it at the moment, pound is going up, and it's bounced from a key level, this level here, 126. Now, in terms of our entry, basically, when we came down outside of this outer Bollinger Band, we were looking to get long, and we did it on that candle. Now, just for any viewers who don't know how Bollinger Bands work, when the two outer bands get wide, they're showing volatility is high. You don't normally stay outside of an outer Bollinger Band for long. You'll normally come back within. Now, we did come back within, but then we managed to come outside again. I mean, it's not a big move down here, really. We just put our stop behind the key support level, 126. Everyone who's an institution will be focused on this level, or nearly every institution as far as I'm aware. It's a massive support level. Be very hard to push through it. We're a bit early, okay, but I wasn't too concerned about it drifting down to this level because I felt there'd be no big order flow or no big sell orders here. There was no volume, no big sell orders. We bounce and then we bounce again. I think now the pound will gain traction to the upside. So if I just draw a trajectory in, if I can get it straight, which I can never do actually, sorry about this. There we go. Then I've got three bodies. So I've got support here on three bodies. Then I've got the major support level. Nice blue. We're at 127.30, so we're still 20 pips underwater. But through this high, and we will be going up. Okay, we're just sitting below the high. Obviously, you've got bodies here. I think next time we go through the highs, then we're off to the upside. Now, in terms of Bollinger Bands, when you move away too far from the mean, you'll normally mean revert. So I'll be looking for a push up towards the mean. Because we're so oversold, you obviously manage to trade as you go. Because we're so oversold, 130 is realistic on the upside. And then 131.80. Okay. The risk reward really, really good in my view. And I think when you can never see, or when little traders or train yourself to do this, when you look at a currency pair and you can see no reason at all why that currency might have a rebound, like in the British pound, step back, question the facts, and then look to see if there is any anticipation that has got no supporting evidence. It takes a little bit of practice, okay? But the media reflects the crowd. And the stories become more outrageous, obviously, when a story becomes newsworthy, like Brexit, or hysteria around Brexit. Pound for me, good risk to reward buy. Now, in relation to the British pound, I do like it on the USD, but my bigger exposure is in the crosses, okay? And we're going to go and look at them now. So we look at Euro GBP and then, GBPCAD. Let's go and take a look at the next chart. The chart of Euro GBP daily. And now in terms of what's happening with traders and anticipation, the British pound, that obviously applies in the crosses as well. Pound has just generally been soft across the board. Now, I like the look of this pair, and in terms of the fundamentals behind the chart, just very quickly, UK economy is doing pretty good. Data coming in above forecasts, that makes interest rate hikes likely. Now, I did say, obviously, if we did have a hard Brexit, you would have the Bank of England raise rates. If Brexit fears dissipate a bit, which I think they will, rate hikes are very likely in the UK because the inflation that's in the UK basically warrants them. So UK going to be pretty good. Interest rates probably going to go up in the near future. What about the EU economy? Well, it's slowing up, lackluster growth. They've got negative rates. They're printing money. So the UK has the edge. Better economy, and the interest rate outlook favours the pound both now and going forward. A wild card in this pair is the EU elections. They're this weekend. Now, general view is that the anti-EU parties get about 30% of the vote. If they do, I don't think that's going to hurt the euro particularly. But at the moment, it's looking like they could get a little bit more than that. If they do, really, the election results really do show a big move above 30%. That is just so bearish for the euro. The euro's got limited upside for us anyway, but keep your eye on the EU elections. Okay, just look at my Facebook pages because I'm putting information up on how things are going in terms of what the likely outcome is going to be, and we'll obviously look at the result. Now, in terms of the technicals, obviously sea of blue candles on the way up, Bollinger Bands pretty wide, and basically coming up to a key level. I'm trying to break above it. It's here, okay, which is just the it's about 88.08. I mean, really, it's a round number. If you look at the weekly chart, you'll see 88 and how important it is. So I'm not showing the weekly chart in this video, but it's a big level. Got a tail there as well, and you can see trying to break out. But we're not breaking out. You see that candle goes up, reverses back. A blue goes up to test the level again, finishes near the highs. Then we get the red, just comes back after poking above, just sitting above the round number. I just personally think we are now going to see the euro fall. Now, where would you come in if you wanted to get in short? My own view is through there. What you want to do is just get clear of this round number, okay? So coming through 87.80, so you're clear of the round number and all the turbulence around it. I say that frequently. You never want to sell just below a round number. Just get a little bit clear. In this case, I think 20 pips is enough. Then see if she runs. Where's she going to run? Well, she's probably going to go down towards the mean, obviously. But I'm going for here because the pound is so oversold. Obviously, manage the trade as you go. Sorry, let me just do that on the bodies. So basically down towards the round number. So 85. Where would you put your stop? Put it back behind the outer Bollinger Band. For me, 88.80. So you got a really good risk to reward here. It's 5 or 6 to 1. Obviously, if I reached my target, you've got to manage the trade as it goes. I mean, there is a level of resistance in between, or support, sorry, which is right there with the 20. But even first target, I think, would be good. And I'm going for second target because I'm just so bearish of the euro. But yes, I think it's a good trade setup. So we'll see how this one goes. And actually, we've already got a small position in, and we will be adding. Just need to get through that 87.80 level. Last pair we're going to look at now is going to be GBPCAD. Right, we're on the chart of GBPCAD, and in terms of this pair, I just really like the look of the setup, and we'll go through the technicals in a moment. But just first of all, for me, the CAD fundamentals are bearish. Interest rates are likely to be cut as global growth is clearly slowing. It's a commodity exporter. So, fundamentals for me favour the GBP longer term. But just even in the short term, from a technical perspective, the CAD is the most overbought of the three majors we're looking at today on the GBP. So the GBP could have, in this pair, the most upside potential. I really like the technicals on this one. Nice big tumble. Bollinger Band's nice and wide, and what attracted me to coming in long was this candle tail here that goes down through the outer Bollinger Band, right outside of it, immediately comes back within and comes back above a previous support level. This tail did not take long to retrace, so personally thought the selling was exhausted, so can have a very aggressive entry. Just come through those two red bodies. We did poke lower again through 170. This tail can't get anywhere near that tail. No volume here, no sellers, back blue, and then blue again. Draw trajectory in. So I've got two levels of support, one a double trend line. Stop needs to be back outside of the outer Bollinger Band in my view, just in case we get one more spike to the downside. And if we clear these two red bodies there, the tail there, and the body there next week, that I think is a good entry, and then we'll be going to the upside. How far could we go? I think you'd see this as a good level target, or I certainly would. Up towards obviously the 20, but I think we could overrun, go into the 174 level. That give you 3-1 in terms of risk to reward. But my own view is we could go back towards the recent highs and retrace the whole of the decline. Obviously, that's longer term. You've got to manage the trade as you go, so to speak. But for me, this is just the type of setup I just really like. The exhaustion outside of the band, back through a round number, then pushing off. Go for this setup all the time, and I don't care if I'm wrong. I'd rather be right, but your risk to reward is just so good. So they're the three pairs today. We will see how they go, but I'm looking for the kind of doom and gloom around the British pound to abate next week, and hopefully get some decent profits. We'll obviously see what happens, but that's the video for today. Thank you very much for watching me as per usual. Take care and have a good day.